you know what time it is. It is time for another market outlook video. So what I'm going to do is I'm going to break down the charts for you, give you the biases and the key levels to focus on so that you can trade next week and hopefully make a profit. Now, last week, if you are part of our Telegram channel, you will know that it was a very difficult week, okay, because there wasn't much momentum in the market, which I will show it to you on the chart shortly. Okay, so last week was a very difficult week to trade and we barely just broke even. Okay, so just want to spend some time talking about last week. Okay, this is the reality of trading. Our team, we are very honest with you. We always share with you the truth. Okay, we do not try to tell you that trading is very easy and that you can make money every single day or that you will make money 99.999% of the time. Okay, trading is a grind and this is just part of the process. Okay, we have winning weeks, we have losing weeks. Okay, this is just how it is. By the way, if you are new to the channel and you have not yet joined us on Telegram, please join us. I'll leave a link in the description down below. Okay, it's totally free. We send a lot of educational tips as well as signals in this channel. Now, if you are new Telegram subscriber and you have not yet joined us on YouTube, please hit the subscribe button, right? Please hit the thumbs up button as well because we create many videos like this on YouTube to help you become a better trader. So, right now, I want to go through the charts, okay? Before I do that, I want to make sure that you've gotten the free day trading guide that we prepared for you, okay? Because this market outlook video is not going to make sense to you if you do not download this free day trading guide, okay? Because I will be using the MPE trading strategy to analyze the market. So obviously you will not know what I'm doing if you do not read this day trading guide, okay? So please go get it, it's totally free, okay? If you are an advanced trader, you do not need to read the entire thing because, you know, we have candlestick pattern cheat sheet. You don't really need to know all this if you are an experienced trader. But what you do need to know is you need to know market condition, price level and entry, okay? Because that will help you understand how I break down the currency pairs shortly. Okay, so just head over to the link in the description down below. It will take you to this page. Click on this and then just input your email and we'll send it to you. So let's get into the analysis. First thing we always do is Forex Factory Economic Calendar Analysis. Okay, this is the first thing that we always do. If you watch our previous videos, you will know that this is something that we do week in and week out. Okay, without fail, it always something that we do. So taking a look next week. Next week, again, it looks like a very difficult week. So let me explain why it's going to be a difficult week. Firstly, we have this BOC rate statement, okay? That's Canadian news. So Canadian news is not as high impact as Euro or USD because Euro and USD are the main currency pairs. Now, the thing that I don't like about next week is that there is Euro, okay? You have this policy statement and you have this dreaded press conference, okay? I hate press conferences because press conferences is where the market will not move the entire week, okay? So next week, expect it to be very whippy, okay? In fact, more whippy than this week that we just had, okay? It's going to be very difficult to trade, okay? You can expect price to move after Thursday, okay? After this ECB press conference. For me, I am based in GMT +8, so it's 8:30 PM for me. So depending on where you are, it might be some other timing. So just log into this Forex Factory, input your time zone, and you will get the timing of the press conference, okay? Now, the reason why the press conference always results in whippy movement is because we do not know what to expect. No one knows what to expect during an ECB press conference, right? The president can say anything, any questions can be asked. So for this reason, even big institutional players do not know what to expect. They do not trade beforehand. So for this reason, do expect the market to be very whippy and let's get into the charts. Now let's start off with DXY. DXY stands for dollar index, okay? So dollar index represents the strength of USD. So if DXY is dropping, that means dollar is weakening. And of course, if it's strengthening, that means dollar is strengthening. So in the previous market outlook videos, I mentioned that we need some time for dollar to retrace higher. And in fact, we actually got it. Okay, we got it on Thursday. It pumped up somewhere here, right smack into resistance. And then what happens next was that price started selling down. Now, the reason why last week was so weepy was, just look at this, right? Was because this candle right here pumped right into resistance. It closed above this high as well. Okay, if you just look, let me just zoom in. It closed above this high as well, right? So what happens is that a lot of traders thought that dollar is bullish, and what they do is they chase a breakout, and they are actually buying right smack into resistance. And then look what happens next. You have this piercing pattern that is just closing back into this range. Okay, it's lower than this high and lower than this high. Okay, so there was a almost instantaneous switch in the momentum, which I think a lot of people actually lost money because price moves just so fast. One moment is up, the next moment is down, right? In fact, if you were to go into the H4 chart, this is a very clear pattern. You can see right over here, okay, price was just consolidated up and then it smacked down. Okay, so this is the reason why many currency pairs were the way they were. Okay, they didn't really trend, and that's why we cut our losses short very quickly. Okay, by the way, that's very important. Make sure you cut your losses fast if you're wrong. Okay, back to this analysis. So market structure wise, M stands for market condition. Market condition is bearish, okay, because you have low, high, lower, low, lower, high, lower, low. Okay, so it's bearish and it retraced to resistance here. Okay, so ideally we wanted to look for a short higher and then short it down. Okay, anyway, most of you will not be trading DXY. Okay, I personally do not trade DXY, so I will not spend too much time on this, but I just want to mention that this is the key level. Okay, price level is somewhere around here. Market condition is bearish, bias is bearish, and potentially price could just retrace down, or rather sell down to this support level over here. Okay, just take note of this. Now let's go into euro dollar. Okay, so let's start with market condition. Okay, we always do the same thing, MPE. Market condition is bullish. So let me show you why it's bullish. You have a high here, you have a low, higher high, higher low, higher high. This low right here hasn't been violated. Okay, so because this low hasn't been violated, then if you were to look at this, okay, it's all in the guide. If the market is in an uptrend, then you should be looking to buy only. So this low is not violated, so we want to buy only. Now the next thing that we need to know is, since we want to buy, where do we buy it at, right? That's the next big question. So you can see that right here, there's a spike low right here, okay? And if you were to scroll back and switch over to the line chart, you can see that this line right here coincides with this point here, this point here, this point here, and this point here as well. So this is a very strong level, but I think the most obvious level is actually this bar here, okay, or rather the most obvious sign that this is a strong level is this level right here. Okay, we also have an ascending trend line. If you connect this low right here, just tweak it a bit with this low, price is also at the ascending trend line. Okay, and more importantly, this is a fake out. Okay, this is very similar to the DXY that I explained right here. Okay, here you can see that this bar, maybe let me just delete this so it's clearer. You can see it. So you can see that this bar right here on Thursday barely closed below this level, right? Because this level is here and price closed just below here. It just closed slightly below to trap a lot of bears. Bears who are trading the breakout, okay, they trap the sellers right here, and then you start to pump price up after that. Okay, so this is what the market does. It's very nasty last week, and even this spike here, you can see, I think a lot of people bought here as well. Let me show you. A lot of people bought here, and what happens after that? Price starts selling down. Okay, so just be very careful about trading next week, because next week, as I mentioned, there's going to be ECB. Okay, so this support is still valid, right? If you really want to trade, then what you can do is you can look for a retracement down. Okay, look for something like that, look for a nice candlestick pattern here, and then you take the long trade up. Okay, and this would complete the MPE trading strategy. Market condition bullish, price level is given. The last thing that we need is an entry trigger, and that could come in the form of a hammer, a bullish engulfing, a piercing pattern. Okay, you just need a candlestick pattern to show you that that support level is strong. Okay, so that's how we will trade euro dollar. Now, pound dollar, I won't spend so much time because it's in a range, and I don't recommend trading it next week because the range is rather tight. So again, market condition is bullish. You have a high here, you have a low, you have a higher high, higher low, higher high. This low hasn't been violated, so the market condition is still bullish. Now, price is trapped within this range, okay? Now, the reason why I say do not trade this is because by the time you get a confirmation candle, okay, let's say you were to take this as a confirmation candle because this is like a piercing pattern and you were to trade something like this. Okay, you can see that the risk to reward doesn't make sense, right? Because by the time you get the confirmation, you are already trading in the middle of the range. Okay, and what should you do in a range bound market? You should buy low, right? Buy somewhere here and sell high. You shouldn't be trading in the middle of the range. So I think that this range is rather tight. Okay, and by the time you get a confirmation, it's probably somewhere here in the middle. So for this reason, I advise you not to trade this currency pair. Okay, ideally, if you really want to trade, then you just wait for price to break out. Okay, retest it, look for an entry trigger somewhere here, and then you can take the long trade up. Okay, that's how I will recommend trading it. Now, dollar franc. Dollar franc is a bit tricky. Okay, it's quite tricky, so just bear with me. So previously, I highlighted this descending trend line, and you can see that this candle right here broke the descending trend line, and then after that you get a nice retracement down that fails to break down lower. Okay, so this trend line shows that this is kind of like a double bottom pattern. Okay, double bottom pattern. In fact, if you were to draw the neckline, which is over here, okay, let me just zoom in. You can see that on Thursday, price barely closed above. Again, this is the same pattern as the euro dollar, okay, because euro dollar and dollar franc are the opposites of each other, okay. So you can see that price closed above, and then after that it just smacked down, okay. So it's very difficult to trade, and personally I still think that price is approaching a very strong support. You can see that this is support, this is support, this is support, okay. So this entire zone right here is a very strong support. So ideally, I would expect price to retrace down lower, okay, or sell down to here, and then I would take a reversal play. Okay, this is not recommended for beginner traders, okay, because this is a reversal trade. Okay, it's not strictly following the trend because the big trend right here is still down. Okay, market condition, you have low, high, lower low, lower high, lower low, lower high, and lower low. Okay, this high is not broken yet. Okay, so if you want to trade and buy here, then this is against the trend, so it's going to be higher risk, and potentially you could, you know, make more money if you get it right because you are buying picking the low. Okay, so if you are a beginner, please do not trade this, but I just want to highlight that this is a strong support. Okay, and it seems like there are signs that this market is bottoming for now. Okay, just watch this level, and the next level is of course here, which is the recent swing high. If this level is broken, then you can expect price to make a rebound higher. Now let's look at Aussie dollar. Now Aussie dollar is another pain in the ass, okay, because what happened was that same pattern. You can see this pattern has been happening a lot on all the currency pairs, right? Price goes one way and then totally reverses. You see, look at this again. On Thursday, what happened was that price closed below the entire region right here. You can see that it closes below this low, this low, this low, and this low, right? But what happens is that there is actually some support here. Okay, I believe in one of my market outlook videos, I did mention that this is support as well. Okay, this entire zone is support, and I did warn you that you should be cautious of shorting because there are multiple levels of support. So true enough, what happened was that price sell down and then it instantly made a reversal back into the zone. Okay, so for this Aussie dollar, I will not recommend whether you buy or sell because it's just too, it's just, it could be a buy or could be a sell, right? It's really confusing. So I don't want to give you a bias. All I want to say is that this level is very important. This level is important as well because this is actually the previous left shoulder and right shoulder. Okay, in fact, you scroll back here as well and here as well. So this is a very important level, and of course on the downside you have this level and this level here as well. Okay, so just take note of these levels. I don't recommend you trade it, but if you really want to trade, then just take note of these levels. Now Kiwi dollar. Kiwi dollar is a bit better than Aussie dollar because the levels are clearer. Okay, so market condition wise, it's like Aussie dollar is range bound. Okay, you can see that this is the high, this is the low. It's a very obvious setup. One of the things, or rather reasons why I love trading this, or rather I will look to trade this, is because the range is quite wide. Okay, contrast this to pound dollar where the range is so small. This Kiwi dollar, I could potentially wait for a setup, okay, wait for price to retrace lower, okay, and you know, if I can get in with a nice stop loss, then there is still some distance for price to travel. So I think I still can capture a good risk to reward, maybe something like this, okay. I can still get in at maybe 1:2, something like this, right? This is a better trade than a pound dollar. So just wait. Market condition is consolidating, or rather range bound. Price level I've given you, it's this low and this high right here. The last thing that you need is you need a price action candlestick pattern at a key level, which is either here or here. Okay, if price goes up, then you could also potentially look to sell it down and you know, do the opposite, something like this. Okay, let me just show it to you, something like this. So you can see that there is still a very good risk to reward. You still can make 2.91. So if you risk $100, you still can make $291, which is still pretty good. Okay, so dollar CAD, let's look at dollar CAD. Dollar CAD, previously I said that it's very close to the bottom. You can see right here there is support, and one thing that is worth noting is that there is the 1.20 psychological level. Okay, price is trading at 1.2068. okay, so 1.20 is a psychological level. Okay, it's a whole number, so it's very difficult to break, and I don't like this sluggish price movement going into it. The big trend is down for sure. Okay, if you look at this, you can see that it's all a series of lower lows and lower highs. Okay, there's no way that this is bullish, but the problem is that we are trading into support. Okay, we are very close to support now, so I don't recommend trading this. Okay, personally, I prefer to wait for a reversal of this entire pattern. So maybe price will sell down into this support, do a rebound, and then I look for a inverted head and shoulders. Okay, something like this. Let me show it to you. So if price were to do this, then this will be your left shoulder, this will be the head, and this will be your potential right shoulder. Okay, that's how I will do it. Personally, I will not short it, but I just want to give you the levels and show you that price is approaching the support level right over here. Okay, dollar yen. Dollar yen is in an uptrend. So let's talk about market condition first. Okay, this is an uptrend because you have a high here, you have a low, you have a higher high, higher low. Okay, then you have an ascending trend line as well. So if you were to connect the low here and this low here, you can see that there is some form of confluence for this support level. Okay, because you have this horizontal level which is given by this level over here. Let me just adjust it a bit. But with it, which is given by this swing high, okay, this previous swing high right here, okay, and it has confluence with this ascending trend line. Okay, so I'm just waiting for price to sell down a bit lower. Okay, look for a candlestick pattern. Okay, and then I can take the trade, something like this. Okay, depending on how the candlestick pattern form, and then I'll target the swing high right here. Okay, again, you can see that there is a very good risk to reward ratio potentially. Okay, so this is a setup that I recommend you focus on, because this setup looks easy. Okay, it's very clean, it's very straightforward. Okay, compared to the other currency pairs which I show you, you know, like euro dollar, Aussie dollar, these are very difficult to trade. So try to stick to a dollar yen next week, and we will send this in our Telegram channel, right, if we see any opportunities. So make sure you join us on Telegram if you have not already done so. Now let's go on to gold. Gold, it's uptrend as well. Okay, you can see that this is a high low, higher high, higher low, higher high, higher low, higher high. So it's a very clear uptrend. Now price is actually bouncing off support. This entire zone is support. If you were to look back, you can see that this was support, 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 resistance, resistance. So this is a very strong level. Now the problem is that right now price is in the middle of nowhere. Okay, it's like in the middle of here, middle of this and this. Is in the middle of resistance and in the middle of support. So personally, I recommend that you wait for price to come up, okay, come back down, okay, find support at this ascending trend line, look for a candlestick pattern, then you could potentially get in with a tighter stop loss, okay, maybe something like this. Okay, something like this. Okay, the risk to reward is not that perfect, not that excellent. Okay, it's not the best. But what happens is that if you were to enter it right now and you do it something like this, you know, then your risk to reward is even worse. So please do not do that. Please just wait for price to retrace back. Okay, retrace back down to this trend line and this zone of support. Look for a engulfing pattern, a hammer, or a piercing pattern, and then you can enter, set in your stop loss, and potentially target here. Okay, if this level is broken, which I believe will be broken, then you can look for this level right here. Okay, this is the recent swing high. Okay, personally, if I were to trade this, what I would do is I would take a trade somewhere here, shift my stop loss to break even when price hits here, and look to take profit right here. Okay, that's how I would trade it. But feel free to take profit, take partial profit when price reaches this level as well. Okay, there's no wrong or right way to manage a trade. So I just want to highlight that this is a resistance level, and then the next resistance level is right here. Now Euro Pound. Euro Pound is another tricky one. Okay, last week's analysis, okay, in last week's market outlook video, I said that if you want to go for a high risk trade, then you could potentially look to sell right here. Okay, but the problem was that this candle wasn't convincing, and by the time this candle happened, you are selling right smack into support. Okay, so last week wasn't a very good week to be selling right here, even though it was ideal. Perhaps if you went into the lower time frame to look for an entry, then that would have been a better setup. But again, the MPE trading strategy, we are using the daily chart. So if you strictly look at the daily chart, then this would have been a trade that you miss. Now, anyway, the market condition is bearish because we have a low, we have a high, we have a lower low, and we have a lower high. Again, this high is not violated yet, so we are still bearish, and right now price is parked at support. Okay, so the question is whether price will carry on to do this first, okay, and then after that start selling down, or will it sell down straight? Okay, I do not know. Okay, but one thing to note is that this level right here is very strong. Okay, I'm very cautious with trading this breakout, because what might happen is that price might do something like, just like that, and then after that it starts retracing higher. Okay, so my advice would be, if you really want to sell, look to sell at the trend line, the top of the trend line. Okay, do not just trade a breakout here, because there is a very high chance that price will retrace higher and then stop you out first and then start selling down. Okay, so the next level to look at is here. Okay, this low here is very obvious level. You can see that this is support, and of course if this is broken, then the recent swing low right here. Okay, so just be very careful with Euro Pound. It's a bit tricky to trade. Now let's talk about Pound Yen, and then I'll end off with NZDUSD. Pound Yen is in a clear uptrend. Okay, you have a high, you have a low, higher high, higher low, higher high, higher low, right? So it's definitely bullish. I have this trend line drawn as well, and just let me tweak it a bit. So potentially it could be, if you just tweak it, something like that. Potentially, I would like to see price spike this low right here. Okay, maybe like a nice hammer so that it closes above the trend line, but at the same time it tests this support level. Okay, the trend is definitely bullish, and you definitely want to be buying. Okay, at least if you are trading the daily time frame, your only bias should be to buy. Okay, if you want to trade the H4, the H1, it's fine, but at least based on the daily chart, the trend is up, right? You want to follow the trend and you want to use the MP trading strategy, then you should be buying. Okay, so just watch this level, watch this trend line. If this level holds, then potentially we could see 156.6, which is this recent swing higher. Okay, again, this is like the yen trade. It's a very clear setup. This is why I recommend that you stick to dollar yen and pound yen moving into next week. Okay, basically try to focus on the yen pairs next week. So let's look at NZDUSD, and I'll end off this video. Okay, NZDUSD is in an uptrend because you have a high here, you have a low, you have a higher high, higher low. Okay, you have something like an trend line. Okay, actually this trend line is not valid yet because we haven't gotten a higher high, but let's just assume that, you know, price has already gone higher, because right now I'm trying to project what happens if price goes higher. What I want to see is I want to see price going higher. Okay, I want to see price retrace to this resistance level with the trend line confluence, and then I'll look for a long trade here, and then I'll buy it up. Okay, so this is the reason why I drew this trend line. Okay, not because it's valid right now, but more because I expect price to break up. Okay, when it breaks up, retrace down, confluence with the trend line, and then I'll take the long. Okay, but it's very clear bullish bias for NZDUSD 100. Okay, this is a very strong level. You can see that previously price rejected this entire zone. Actually, you can see that this entire zone right here is a very strong zone. You can see price supported, rejected, rejected. So if price breaks above, then this will be a very good support that we could buy, right? And of course target here, and if this is broken, then it's probably going to the moon because this is the all-time high. So I won't want to give any levels about how far price can go. Okay, if you were to buy here and you do not take profit here, then what I recommend is you throw your stop loss. Okay, throw your stop loss because there are no resistance level on top, right? It's literally to the moon because there is no prior market structure. Okay, so that's all I have for you in this market outlook video. I hope you got a lot of value, right? If you are new, you have not yet subscribed to the YouTube channel, please do that, right? Also, please do me a favor and hit that thumbs up button. It really helps support the channel. If you are a YouTube subscriber and you have not yet joined us on Telegram, please go join us. Okay, it's really free. There's no catch, right? It's totally free. You are missing out a lot if you are not joining us on Telegram. All the links to this will be provided in the description down below, including the 3-day trading guide which I've prepared for you. Okay, there's a lot of value in this. Okay, you can see it's a very comprehensive guide. Took my team a lot of time to prepare it for you. So please go grab it. Again, the link's in the description. Right, please trade safe next week. Next week is looking like a difficult week. Please manage your risk, right? Do not risk more than 3% per trade. And even if you had a losing week, it's fine, right? Because with proper risk management, there's always another week. Okay, you're not going to blow your account if you are trading 1 or 2% or even 3% per trade. Okay, it's not a big deal if you lose money for a week. So with that being said, I hope you trade safe, I hope you manage your risk well, and I'll see you in the Telegram channel. Thanks for watching.